Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing an advanced comprehensive problem. That means all the four methods of valuation of goodwill will be utilized here. However, this specific problem will be a little tricky, so let's understand it. When we speak about comprehensive problems, this includes all the four methods being utilized under one specific illustration itself. We have already learned a basic problem which we have discussed in the earlier video. Now what we'll be doing further is that we'll be going ahead with a tricky problem just to make sure that you can deal with any kind of questions. Now this is the part 1, so you can understand that part 2 will be a little trickier question as compared to this specific one. So let's go ahead with the illustration mentioned down here, and we'll start with the calculation of average profit, super profit, annuity method profit, and capitalization method profit, which can be further utilized to calculate the goodwill here. So let's go ahead and note down the illustration. So now that we have figured out the problem, we have mentioned all the details here. We'll explain it one by one to you so that we can understand all these details and go forward with the calculation of it. Mrs. XYZ Limited gave the description about the following details of goodwill calculation for the next 3 years purchase. Year-wise segregation for 5 years, that means 2008, 2009, 2010, 2011 and 2012 has been provided here, with the profits adjoining to each and every year. Normal rate of return is considered as 15%. Annuity value for 5 years is considered for a specific amount that has been mentioned here. That's 2.8930. Capital employed is rupees 2 lakhs. Annuity value has been also considered on the basis of the super profit that is being calculated. So that is the normal rate of return that will be used everywhere. Now, when all these details are provided, you have to go ahead and calculate the goodwill for next 3 years purchase under all these four methods. So let's go ahead with the first factor being utilized is the average profit method. Now, if we can figure out, the profits mentioned here are in an increasing trend. So whenever there is a trend that is observed, you have to go ahead and calculate the profit as per the weighted average method. So we'll use the weighted average method here itself. Now, if we can figure out, we have mentioned the average profit which has been calculated here as per the weighted average method, whereby we have also mentioned that the total of weighted average profit here goes as 14 lakhs and the other total of the weights goes to 15. So 14 lakhs divided by 15 gives you a total of 93,333. Now, when you have this total of 93,333, to figure out the goodwill under this scenario for 3 years, you simply have to multiply 93,333 with the year 3. That means 3 years to be multiplied by this. So this will give you a total of the goodwill value for the next 3 years purchase. Let's figure it out. So the goodwill value under this kind of method for this illustration is 2,80,000. So that's the goodwill value as per average profit method. Now let's go ahead and figure out what is super profit that can be earned here and what is the goodwill according to that. So under super profit method, you have to utilize the average profit that has been derived earlier and the normal profit has to be calculated. To calculate the normal profit, you understand that you need capital employed and the normal rate of return. So whatever is the amount, when you multiply capital employed with the normal rate of return, whatever amount you get, that is the normal profit. So average profit minus normal profit, the difference that you get is the super profit here. So under this illustration, we have calculated the normal profit as 2 lakh multiplied by 50%, which is 30,000, and the average profit being 93,333. So if you subtract 93,333 and from that if you minus 30,000 here, so that is the balance that will be left here, which is known as super profit. According to that itself, we'll go ahead and calculate the goodwill for 3 years purchase. So if we can figure out, the goodwill that has been calculated is 1,89,999. So this is the goodwill under super profit method. Let's go on to the next method that is defined as annuity method. For this in this illustration, we have already details. All the details have been already mentioned for you, rather we can say, which is for annuity for 5 years has been already mentioned. So you'll go ahead and use those details with the super profit that has been earned to figure out what is the goodwill value as per annuity method. So we have also completed the annuity method problem, whereby we have already mentioned that the super profit is 63,333. The annuity value that has been mentioned is 2.8930 for straight 5 years purchase. So when you multiply 2.8930 multiplied by 63,333, you get a value of 1,82,999. So you get a value of 1,83,222.369. So that is the value of the goodwill for 3 years purchase under annuity method. So we are done with the 3 methods now. We'll go ahead with the last method and understand how to use a capitalization method under this kind of scenario. So we can figure out, we have also mentioned all these details under capitalization method as well. What you have taken into consideration is the capital employed, the normal rate of return, and the average profit. We have first figured out the normal profit of the business, which is equivalent to average profit divided by normal rate of return. In this scenario, average profit was 93,333 divided by 15 rate of interest, that means 15%, which gives you a total of 6,22,220. Now that's the normal value of the business. The capital employed has been mentioned as 2 lakh rupees. So accordingly, you have to go ahead and figure out what is the difference between the normal value of business minus the capital employed, and that is the capitalization profit that will be used for calculation of goodwill. So I hope this sum gave you a clarity about all these 4 methods under illustration problem and any other figures that we need to discuss on this part. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.